your option chain goes, I set my option chain up so I can see more of what the market is doing, so I can understand a little bit more how volatile it might be,
Okay.
where I actually might put in my money. So on your option chain right there, where you have layouts,
Right.
I would probably add, probability of being in the money
Okay.
and volume on there and open interest.
Okay.
Those are the three keys that I usually like to have open. The open interest basically shows you how many open calls are already on there.
Okay.
The volume will show you how many calls went in on that day, and the probability of being in the money. I hope you kind of already know what that is from the stocks, right?
Right. 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 Okay. So on this option chain, where would I find this? The probability of being in the money. I see they got charts
Oh,
here.
basically, where you were down at with the option chain, you'll go over three, where you see last X and net change. You'll
Okay.
click on that. At the bottom, it says customize. You'll go ahead and click on there. On the
Okay.
left hand side, when it pops up, you'll basically type in volume.
Okay.
You'll grab that one. The next one is open interest, open.int. Yeah, right there.
Open.
Second one down.
Okay.
And then the probability of being in the money. Prob should pop up. Yeah, in the
Open money. All right. I already learned 400% more than I knew. So
money. Yeah,
boom.
man, this is
All
the
right.
fun part right here. So when you add these, man, you actually get to see what's going on in the markets. This is what I really love. As far as doing technical analysis and everything else, this is kind of like the bread and butter because this is actually helping you see what's going on during the day.
Okay.
Um, when putting these stocks in here and see who's actually betting on them, how far out, and you can see the positive side and the negative side, so you can kind of make your adjustment on whether you would like to trade them or not.
Can you see my chart on the right hand side?
Yes, sir. I see you.
Okay, cool. So, all right. So when we're looking at, like I said, I don't know anything. Someone that doesn't know anything about options, um, you kind of walked us through your setup. How am I going to get the well? I'm going to ask you what I always want to know. How can I get in for the biggest potential move? Do all of the and I've heard about weeklies. Do all options have weeklies? Some options have weeklies. How do the time frames work?
Only some options have weeklies, not
Okay.
all of them. The
Okay.
ones that don't have the weeklies, those tend to hurt the less and
Mm,
tend to give the biggest payouts. The one that have the weeklies are kind of mostly like gambling, man. If
okay.
you know the stock is going to go up in that week and you play the weeklies, you're more intent to come out with a bigger sum of money than you would if you played the long call. Now,
Okay.
the long call in all actuality pays out more over the time than the weekly does. And once the weekly is up, you're basically done. But if you're still on the long call and she goes past your strike price or higher than you expect and you're holding, you're basically holding a nice little bag right there.
Gotcha. Okay. So this leads me to the next question. So let's look at some stocks. What are some so the stocks that have weeklies? Are those going to be more of the popular stocks or more higher, the more stocks that are trading with more volume? Um, what
Uh,
determines which ones have weeklies and the ones that don't?
Now, that's something I've never discovered which one determines has them or not.
Okay.
I've noticed the most volatile stocks usually have the weeklies, and I'm thinking that's because they want more people to go in them. Um, for instance, spies. Spy and Qs basically have weeklies all throughout them. Now, you can get burnt on some of the weeklies because a lot of people tend to do credit debit spreads.
Okay.
If the stock doesn't go your way, you basically get burned on the spread. But the weeklies are basically there for those spreads, and they tend to work very good as long as you know which key way the stock could be moving. If you have a 60% chance of you think of it going up, I definitely put a debit spread. If you found a 60% chance or more for it going up, I put the vertical spread. It just really depends. But the weeklies, I tend to see they pay out more. when I tend to go on, for instance, if like we'll take this example of SPY.
Okay.
If I know this week they're going to go at least to 400, and I'm going to go ahead and go a weekly, at least to March 8th. If I want to see if it has more potential, I'll do a March 15th, which is 15 days out.
Okay.
The March 8th would basically be this week coming up, this Friday. Now, there is more volatility on this week than there would be on the next week, seeing that, we're trying to see if this is going to close out this week.
Right.
But the more volatile, the more money comes in, and you start to see the option change, and you'll notice more money flowing in there, and your option prices actually go up. That's what I kind of like about the weeklies. If you're in the money and there's more people coming in, they start changing those numbers. It more or less goes in your favor. Now, when it goes down, oh my gosh, it goes down out of your favor and fast, baby. Like, oh, it's the killer sometimes.
Right.
I tend to want to pick 14 to 30 days out just because I know those are the most safer plays to make. They cost a little more, but in the long run, if the stock tends to go down, I can hold it for a little longer and see what the magic is going to do for me. Usually, I've always had an 80 to 90% chance of it turning back over to positive and me going out at least even or a little bit higher than what I was expecting. But holding it actually has been helping out for me cut my losses.
Right.
So,
Okay. So basically, the more volatility, obviously, the more potential for more wins and more losses,
hmm
from what I'm hearing. Um, and the weeklies are going to be a lot more volatile than a longer term out in the future. So, okay.
correct.
All right. So strike price. Now this is something that I've always been confused on when it comes to the strike price. How and because when I think about options, I think about some option that you buy, and if you don't sell it this date, it expires. If the stock is a certain price, it expires and you lose all your money, or you're in the money, it hits the strike price and you make a ton of money. But from what I understand, you can cut losses, you can put stops in, you can sell before the expiration date. Tell me how all that comes into play when you're playing options.
Basically, when I'm playing, I am looking for the most bang for my buck
Okay.
and what is going to be the safest route. Safest route being I need to know some type of potential of up or downside when it comes to the stock. Now, just because I get in and it goes down immediately doesn't mean that I cut the stock. If I've done some long-term technical analysis for an hour, maybe even a week out, and I see it going up in the next day or two, I'll just go ahead and hold on for the ride because it's usually been paying out in my favor a lot more than I expected here lately. As
Okay.
far as strike price goes, man, that has to do a lot with your own due diligence. Um, Me personally, being in the money, it gets a lot more churning as far as payout than it does to be out of the money and wait for it to hit. Now, being in the money also, you have to know whether it's going to go up or down because once it comes out the money, you're going to lose some. I mean, you'll gain it back once it comes back in the money. But I mean, our job is to basically always go up on these stocks or down, whichever way we're playing. We always just want to be in the positive money sector in a sense. So,
Okay.
doing your due diligence before you go in to pick your strike price is where you're going to come in at. Like when I find a stock, I look at it, see where it's at, then I look at the strike at where it's at. It might be sitting at like 379 right now, and I might be pretty sure more than normal positive it's going to hit the 380. Well, if that's the case, if I know it's going to go up at least 4 to 5 strike prices, I'll take that leap out and go ahead and collect on what's coming to me. If I don't feel like that, I'll go ahead and try to stay in the money, let it collect a little bit, and if it's going to drop, I'll go out before it drops. If I'm picking the downside and I'm picking in the money, more than likely, if I'm in the money, it's just going to go ahead and start collecting immediately. But if I don't think it's going to go down right away, I'll pick out the money strikes and let or wait for it to hit. It all has to do with your own DD and where you find the stock going at. That's something I had to leave up to the potential user, basically. I mean, I can look at stocks all day and give you my guesstimate, but I need people to kind of look with their own eyes and see where it's going. If you feel like it has a good case of going up or down, or you just feel like you have a good case, period, being in the money is where I expect everybody to start at.
Okay.
It just tends to triple, double, quadruple. I mean, you see the numbers just change astronomically. I remember my first trade was a Netflix in the money, and I didn't know about in the money and out the money, but I learned quick that day. My first trade was about $8,000, and it came from I think it was 600, and we were in a Netflix trade. It went from 330 to about 390.
Hmm.
Profited a large amount from that, but it was mostly from just starting off in the money. It started off clicking for me already, so that was great. Even with it not being in the money, I would have made a substantial gain, but uh, me kind of knowing it was going up, being in the money is where I wanted to be, made my profit fast, was able to get out the next day. Potentially, I like to hold stocks a day or two, honestly. I mean, this day trading in and out. I try to do that a little bit more, but here on these volatile markets, the way it is right now, how everybody's kind of bleeding out, doing this rotation, I stick to spreads, debit, debit credit spreads, whatever I can do to uh, just minimize any type of risk of loss right now.
Gotcha. Okay. So what? And so when you talk about in the money and out of the money, that means, if I'm correct me if I'm wrong, that when a stock is when you buy a stock, it's at a price to where you're either making profit pretty much immediately or you're breaking even. Is that what in the money is?
Correct, correct.
Okay.
When you're outside of the money, it tends to move a little slower. It just seems like when you click in the money, you kind of get that double digit flavor and you just start to notice the numbers jumping a lot higher, a lot faster, becoming volatile. Um, Payment is just a lot more heavier on that side. Outside of the money, don't get me wrong, when I do my 30 days out, you can still collect the same type of payment and usually a lot more. Just being in the money on a shorter period of time just gives you that fast gratification to grow up that account. I try to blend my style in a little bit of both, and I also do just getting regular stock as well because the name of the game is just trying to get wealthy and stay wealthy.
Right, right. And so now my conception of in the money, out of the money, and time frames was that the further out of the money that you start, and the shorter the time frame, because of course that's the least amount of time that the stock has to go your way. That creates the most potential for the most profitability. So is that a misconception or is that true?
You saying the longer out?
Well, the shorter, from what I understood, the shorter the time frame, which is the the more riskier, and then also being out of the further out of the money you are, which is more riskier, equals the most potential for gains. Is that
Yes, correct.
okay?
Yes, yes.
Okay, so if we're looking at, say we're looking at were posting about GMBL. Let's look at GMBL, and I could probably pull up the chart. Okay, so GMBL, we don't have any weeklies on that, do we?
No.
Okay, so GMBL, let's say let's just go through a practical trade. What in this option chain, what's uh the riskiest but the biggest potential for profit that we have on this option chain?
If we're looking for potential, we're looking at April 16th, the $15 call. That's
Okay,
kind of risky, but Um, it's one above that. You're on the seven. Yeah, that one right there.
really.
Now that's kind of risky, but you got more bang for your buck on this one because Even though she might go up and down, you'll get less of the downside, more of the upside. And the way Gamble is currently been holding up, I see potential to 50 before or just a little bit after the summertime. They've just got good numbers, uh, good profit on board currently, and there just doesn't look like there's going to be anything stopping this. Seeing that there's a lot of people, gaming from home, betting on gaming from home, betting on sports from home. Now,
Right.
this is just sports gaming bets, but this has ties directly to the NFL teams, and they're getting ready to do ties directly to the basketball teams as
Right.
well.
Right.
So, long term, this one for me, I'm trying to keep it in the books. I want a short term move to hold on to it because this 16.5 where it's at right now, this is perfect. I've gotten spike. I've gotten the 8 to 20 spike the first time. I came back again when I was from 16 to 20. I'm trying to go for another 16 to 30 on this next one. Um, just see
Okay.
the
Now,
potential in it.
tell me about now. See, this is getting to what I want to know. So what I'm looking at, as you said, a $15 strike price, which means we're already in the money.
Boom, correct.
Okay, and so I'm a big risk taker. I'm the guy that's trying to get in at $1, and I'm $20 out of the money, and I'm trying to make $1 million tomorrow, basically.
Oh
So
man,
so
man, woo, woo.
I know, right? So all these stories, people, playing these options, and even you said you made a big trade, like your first trade.
Yeah, yeah.
Just for people that are listening, that are their time horizon is real constricted. So I'm looking at a $20 strike price on April 16th, and obviously these calls we're way out of the money, right?
You're about $4 away, but
Yeah, so
it's
we're $4 out of the money.
yeah.
These calls are 80 cents.
No, you have to go back over to the ask. It's
Okay.
390, but you can get them for the bid, which is the 350.
Okay.
Now, when you put in this call or put, basically it will ask you for a market order, but you're basically doing a limit order, and you can basically jot in what price you're willing to get it for. So when you do the single, and then
Okay.
yeah, well, right here where it says price, you could actually type in 340, or not 340, but anywhere between 350 and 390, and
Okay.
wait for it to fill for you.
See for
Now,
the bid.
me, I leave it at the 390 and I go from there. If I feel like it's going to go down a little bit before I get in, that's when I'll mess with the limit price between the bid and the ask to see if I can get a better price going in.
All right. So we got 10. We got call options. They're $3.50 on the bid, or $3.90, whatever the case may be. Whenever we buy these, this represents 100 what contracts or
Yeah, 100 shares.
a
Yeah,
hundred shares,
the
okay,
one
for each
contract.
contract. So if I do one contract, right,
Mm-hmm.
and I pull up, then we're going to be looking at um
100 shares. Gamble
we're
at
gonna-
the
we're going to be looking at like around 100 shares. So it's going to be about $1,000.
no 350 65.
350. Okay, so I'll say times 100. So $3 times 100. Okay.
No, 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 no. Cost of trading, including commissions. That's your total price right there. You pay 65 cents to basically get in that trade, but you're paying 350 for the 100 shares of the Gamble stock.
Okay. Gotcha.
Now, when you look at this at the options chain, basically, if you're doing at the bid, or like I said, at the ask is where I usually go. That 390 that's labeled up there,
Right.
you take that decimal point over two, and that's basically the price you're paying to get in there. I'm always going in at the ask. I try not to jumble with the numbers too much unless I know the stock might go down potentially when I get in. But for the most part, I'll just take what I could get and I let my numbers run. So if you just click on that 390 will show up for the 100 shares, and that is one contract.
One contract. All right. And this is getting fun. I'm getting excited. I feel like I feel like I can invest $100 tomorrow in something and make 10,000.
I mean, you can, man. Honestly, there's a couple of them I've been looking at today, and they look like they gonna go. But we gotta wait on the market. And I know, this market is definitely gonna love the fact that one, we got the stimulus sign, so that's awesome. And now we got that J&J one shot vaccine,
Right.
man.
Right. Yeah, we could hit it big. So, all right.
Yeah.
So you buy one call option that's gonna represent 100 shares at the ask. Boom. Now, once we get in the trade, and we'll try not to make this too long. Once we get in a trade,
Hmm.
how are we taking profits? How are we cutting losses? Where does it tell us how much we're profiting so far at any given point in the day or any given point in the trade? Because I don't even know how you tell that.
All right. So on this one, it's going to be just like if you trade regular stock. On
Okay,
your monitor tab, once the order is placed, you'll see it on the monitor tab. It will show you how much you've gained. It will show
gotcha.
you the entry point, and then it will show you where it's going as far as mark prices. I'm not for sure if you've changed your monitor view up, but I got a couple views on mine. I just like to see to make me feel humbled with my money when it comes in. But I just like to see how much it's making, how much it's losing, and how many days I got left before I either need to close a contract or maybe look at rolling it if it's doing really good.
Okay, I'm gonna go to a Twitter account. There was this guy that was saying he was down like 7,000 on a trade at a particular point.
Mm.
So with that being the case, you're basically just waiting to get in the money in order to start trying to break even or be profitable on that. And if you're
No,
not
not
in the money,
necessarily. Not necessarily.
okay,
Sometimes you can come up close to the money, and getting options out far. This is kind of the extra benefit because if you are out far enough and you know it's going to go up, all you're doing is following the money trail. So it's almost like a yellow brick road. They just got dollars laid out for every, cent you go up, your money's going up with you. And when it goes down, it doesn't necessarily go down as much as it would if you did weeklies. Again, getting out of the money tends to give you a little bit of a safe haven. But when you're in the money, if you're in the money and you know it's going to click quick, you want to do the 7 to 14 days. If you're in the money and you're going to wait for it for a while, I'll go out a couple days and maybe go in the money on not a weekly, but still gain money. There's a lot of different ways you can kind of go in here. But to your saying, if you want more bang for your buck, 7 to 14 days in the money and just kind of know which way it's going to go.
okay. Now, what if I want to gamble a little bit and be out of the money? I say, hey, let me buy some calls at the 20 strike price. What does that look like? Is that going to give me more bang for my buck if it does make a bigger move?
Yes, it will. You
Okay.
have to think of it as, we're looking at this gamble stock right now. If
Right.
we're taking that out of the money strike, and out of the money strikes, I like to go 30 days or more. So April 16th, that's fine. That's a good time because it gives us enough time for the stock to go down, maybe retrace or do something funny. But for the most part, we're looking for straight gains. So April 16th, that's fine. 390, that's great. Um, Once you place the trade out of the money, you should start seeing yourself collect as long as it goes up. If it starts going down, you might be minus a couple bucks here and there, but for the most part, you'll see some good digits come in. Pulling the trade before the expiration date is something that you can do if you feel like you've reached your limit.
Okay.
The limit for everybody is different. I can't tell you when to pull out. I can just tell you that when you start seeing dollars, you can cut when you see the 10 or you can cut when you see the 1,000. It's just
Okay.
really up to you and your due diligence on reading charts.
Okay. So whenever this trade, let's say we're up on the trade, um, $1,000, and we say, hey, that's enough. I think the stock's going to flatten out, or it's going to, start pulling back. How do we execute that trade?
Basically, on the monitor tab, if you right click on the trade that we have placed, it
Okay.
will actually give you something that says close order. It will bring back this order entry tool at the bottom.
Okay.
It will ask you the same questions, but instead of buy, you'll have sell. Either if you have a couple shares, which is a couple hundred of shares,
Okay.
or you can just have one share and you'll say share or sell the
Okay.
10 shares of Gamble. You'll hit send and confirm, and it will
Gotcha.
go ahead and give you the list of how much money you'll be getting back if you go ahead and sell at that time. And
Okay.
it will go ahead, because right there, cost of trades, including commission, it will show you how much you're crediting back to your account.
Gotcha. Gotcha. Oh man, I got my homework cut out for me. It's cool. I really didn't know that you could click on the buy, the bid, and the ask, and it automatically fills a form out for you. So that's pretty cool.
Yeah,
Um,
yeah. What I like to do too, man, is Thinkorswim is a very intricate platform.
mhm.
Um, on some trades that I really have faith and confirmation in,
Right.
like today, I put in a couple order entries that I was able to save. So when Monday comes around, all I have to click is send, and it will wait for my price target to hit, and it will get me in that trade
Hmm.
on my option that I'm looking for. I like doing that because when I'm ready, I want to be ready. Because TD has just been a little skippy here because we've been having more than enough players come in the game. So
Right.
um, I just try to set myself up for success at all times.
Okay. So the cheaper
The
uh,
further out
the
you go, the more it's going to be. The closer in you come, the cheaper it's going to be.
okay. So yeah, and that's why some of those calls. Let's look at SNDL for instance.
Oh man,
SNDL.
I'm ready to get another one of these, man. I can't wait. It's supposed to be hitting $10, man. It's looking good. It's jumping up a little bit. I'm waiting for it.
Yeah, yeah, and I mean, and they pull back so much, that
Yeah.
they're in the zone. Any kind of legislation getting passed is gonna, make that thing skyrocket.
Oh yes. Oh yes.
Okay, so if we want to if we get if we go ahead and do this, uh, let's not look at the weeklies right now. What
Correct.
what are okay? What is the definition of a weekly?
Uh Now I don't have the exact term definition, but I know it's just options without the same values that you have as going um, 15 to 30 days out. They tend to have less value in them than the other options do.
Right. Because so
So if you want to make more money, you have to put on more weeklies than you have to put on uh, regular options. So, for instance, if you were to put on the March 12th options, if you were to get two of those on a $2, you can get one $2 March 19th and get more money.
right. Okay. So 12th of March, you got two. I mean, of course, obviously, the longer the period is out, it looks like the cheaper. I mean, I'm sorry, the shorter it is out, the cheaper they get,
Correct.
especially with the bigger strike price. Um, so I mean, basically, if I wanted to get the most bang for my buck, I'm going to be trying to get these super cheap, super slim timelines, and if this thing goes to $4, and I could, I could make the world.
Correct. You can potentially sell out when it's at the 3, 4 area. But the other thing you have to realize is March 12th being 12 days out, you
Mm.
have to hit that in order for the weeklies to start jumping up as they should. Now, coming up close to it, you have to be at least maybe 20 pennies or 20 cents away for it to start really collecting some light on that. If you do the March 19th, you can be 50 to 60 cents out and you can start seeing change accumulating up on that on that share that you buy. So you'll lose out more because of the delta on the weeklies, but as far as the regular, I guess I want to call them monthlies, you don't lose out that much. Delta doesn't kill you that hard. Um, being like if you wanted more bang for your buck, uh, I would definitely go out as far as I can, seeing that most of these are not over $100, going up to $1 until you get to January. And if you're really trying to get money, I'd go out to October or January and put in a couple in the money calls. Like I currently got one in the money call for January 22nd for the 21, and it was 90, $90 basically. But when it starts hitting over the 150 to 175 range, I'm already collecting money.
Okay. So just to be clear, you don't have to wait until it hits that particular strike price. You can sell out at any time. You can close your position at any time.
Correct.
And the expiration date just means that an action needs to be taken, open and close before this expiration date, before they expire worthless.
They don't. I mean, yeah, basically, yeah, because they'll close it out for you even if you're in the money and making money.
Right, and
So
then they expire worthless.
yeah, yeah.
Yeah, and that's what our people think options are super duper easy, and I read a statistic saying that over 70% of all options expire worthless.
Hmm.
So I was pretty
And some
surprised at
people, like when you were just asking the question about getting the strikes on March 12th,
that. Right.
21, you have
Mhm.
to realize that you have to come close to those to even collecting some money. Because if they don't come close, if it's at 130 and
Mhm.
you need for it to hit at least $2,
Mhm.
if it doesn't come close to that, it's expiring worthless. And
Right.
then you can try to sell it, but they want you to pay $5, $10 to sell it. And it's like, come on, man, I didn't even pay that to get in there.
Right.
Yeah, you just really have to pay attention to your strike prices when going in. And I mean, for me, it took a lot of headaches, man, to get that one right. But um, the best way of learning is being in the game. So
You're right about that. Well, we appreciate it, ThaOutKast. We're going to be looking for your calls continually in the Discord. You've been putting out some heat.
man, let me tell you, so far between me and my other two guys, they're trying to join the chat right now. Uh, so far this year, about 80 bands. So,
Great.
man, I've been doing some good numbers just being at home, man. I'm loving the fact my job laid me off and gave me this opportunity, man. I can't say I'm nothing but blessed right now. And a lot of studying time, man. A lot of studying, man. I get bored of it, but just looking at charts over and over helps me recognize the chart patterns, the signals like the doji and everything else. I mean, those little things, everything comes into play with this, man. It's a nice revolving little set going on, and I love playing it, man. It's fun for me. Love the action.
Definitely, definitely. You can't put a price tag on that. So,
Yeah,
again, the Outcast on Twitter. I'm going to be, I'll put this out. I'll send it to you. And yeah, again, we'll be looking for you on the Discord. I'm going to get a little more active on Twitter and on the YouTube. And we're going to keep helping people make money, get some great education, and hopefully, allow people to do what they enjoy doing and be able to live life on their own terms as well and spend time with family and the reason why we work and enjoy the fruits of our labor.
most definitely, man. That's what I kind of been trying to make sure that and anybody and everybody who sees this, man, I just want them to be able to enjoy the fruits of their labor, man. Trading I used to think was hard, man. It took about 7 years to learn all this intricately,
Right.
but all along I had the tools I needed. It was just me starting off and really pushing myself towards it, what really uh, boosted me to rock it off. So the training and everything else, man, I hope people really take into the fact that you just really have to read sometimes. I mean, don't be dumb. Let's get some education in us so we can get further in life.
Awesome, man. Well, we appreciate it. God bless everybody listening, and we will see you on the green side.
Most definitely.
All right. Thanks.
Yep.